guys, Omar Khan here with Theta Trading, and the topic of today's conversation is how much higher is interest rates going to go? We know that this has been a major problem in the economy. If you're a real estate investor, a stock investor like myself, our Theta community, this has been a big thorn in your side. So we're going to look at a couple different things today. We're going to look at the dot plot, which is the best measurement, I think, of where interest rates are going. That is the U.S. Federal Reserve suggesting where rates will be in the future and how this is going to impact our investments. Okay, but before we do that, if I could ask you guys a big favor, if you could hit this like button here, if you could hit the subscribe button, if you want to be notified for future videos, hit the notification button. Now, let's get on to today's topic. How much higher will interest rates go? But before we do that, I want to look at the CNN Fear and Gauge Index, okay? Now, right now, you can take a look at it right here. You can see the Fear and Greed Index. This is as of October 26th. I'm here on, this is the early part of November, so this is very recent. We can see extreme fear. We're at 7. This is a great resource, by the way, if you want to look at how greedy or how fearful the market is. And generally speaking, you kind of want to act to the exact opposite of what the market's doing, okay? So right now, we have extreme fear. Why? Well, we know why. Interest rates are high. People are losing their jobs. People are broke. Housing prices are down. Stock market's in shambles. Extreme fear. But this is where the best opportunities are born, okay? So right now, we are at extreme fear. All right, now Warren Buffett once said, and I want to show you this quote here, "Be fearful when others are greedy, and greedy when others are fearful." That's the key. You know, and I know it's very difficult to do in certain environments when the markets are so poor, but that's really how you become a good investor, is to act the exact opposite. When there's the most amount of fear, hopefully you have money left over, and then you can do something with that money and really make a positive impact on your investments on a go-forward basis. That's the idea here, okay? All right, so now that we know that we're in an extreme fear environment, we are. You can feel it, you know, CNN Fear Gauge Index to me just kind of reiterates it, okay? So now, what exactly is the dot plot, okay? Now I'm going to take a look at Investopedia here, excuse me. Dot plots are a well-known method that the Fed uses to convey its benchmark federal fund rate outlook at certain FOMC, Federal Open Market Committee meetings. FOMC members place dots on the dot plot denoting their projections for future interest rates in subsequent years and in the long run, okay? Now, why is that important? Now, what the federal funds rate is this. It's the amount that banks charge each other to lend money to each other. So if I was one bank and I want to lend to another bank, well, I'm going to be charged on that federal funds rate. Now, at the start of the year, we were at very low levels. We've gone up considerably. And I'm going to get into that a little bit later on. But this is what's been hampering the economy. It is interest rates and inflation, okay? So now we're going to try to take a peek into how much more these interest rates will go up. So if you're looking to buy a house next little while, an investment property, or you're looking to invest in the stock market, this is very valuable information, okay? So remember what the FOMC, now, there are a bunch of Federal Reserve members across the country, okay? Now, these are their projections. Now, this is as of September 21st, that is the last FOMC dot plot projection we have. So we're going to take a look at it here, okay? So going down here to 2022, we can see here, 2022, we're expecting to end the year anywhere from a low point, just below 4%. And currently, by the way, we're at 3 to 3.25%. We started the year off, guess where? A quarter percent. So we've gone up 3%, and that's a huge hit on people's wallets, because now all of a sudden, think if you have a mortgage that's coming due. If you have a variable rate mortgage, you're in big trouble, and the reason the Federal Reserve is doing this and the Bank of Canada is to combat inflation. Inflation is still too hot, okay? So let's say, for example, you're looking to buy a house in 2022. Well, we can see here the rate projections are anywhere from, let's say, just below 4% to a little over 4.5%, 4.625%. But let's take a look at 23. Rates are projected to go up. Okay, on the high end, almost at 5%. And then on top of it, just think of that, 5%. You're at 3 to 3.25 now. Okay, this is suggesting 4.75 to 5%. Now we know that the Federal Reserve is going to probably increase interest rates tomorrow by 75 basis points. We know that now, which is 0.75%. Okay, and they're meeting again in December, and they may increase another 50 basis points, which is 0.5% in December. Big problem. That takes us to this number here, okay? Because we're at 3 to 3.25 right now at the end of October, early November, okay? And we're going to add 1.25% on more before the end of this year. So that takes us to what? That takes us anywhere from 4.25 to 4.5%. Now remember, we started the year off almost with free money. Okay? And what has been propelling the real estate market over the last number of years, one of the main factors has been cheap money. Okay? That cheap money is gone. So it's gone temporarily. We're going to take a look at that dot plot going forward as well. It's gone for the next little while. So what the Federal Reserve is hoping to do is increase interest rates here to a level which causes a lot of pain for you and I, the consumer. They want to kick our ass. They want to make sure we have no money left to spend. So if we have no money left to spend, well, guess what? Inflation is no longer a problem. And they're doing a great job of it. Right? So if you're looking to buy an investment property, let's say in the next little while, and you know rates are going to go up, right? They're going to go up probably 1.25% more this year, and you can see maybe even a little bit more next year. And in 2024, it looks like there's a wide range of projections, all the way from just over 4.5 all the way down to 2.7, let's call it just over 2.5. That is so basically nobody knows at that point in time. Rates are expected to go up even more now. Now, what the idea is, rates go up, the Federal Reserve will wait and see, okay, what is the impact on the economy? Are we kicking their ass enough? Have we destroyed wealth enough? Have we destroyed the ability for the consumer to spend without killing them? Financially, I mean. If so, we can hopefully start reducing interest rates. And that's why in 2024, you have such a huge range of projections. But some people think, some of the Federal Reserve members don't think inflation is going to be under control, and that's why their estimates are still over 4.5. Others do think inflation will be under control, and we were heading for lower interest rates. But what I think we can ascertain here for sure is in the next little while, we're going to have higher interest rates. Now, we may get a surprise which could help us stock investors as well. The Bank of Canada last week did something called a step down. They were expected to increase interest rates by 75 basis points, meaning 0.75%. But they surprised the market. They only increased 50 basis points. Now, that is viewed as a positive sign. Maybe the Federal Reserve in the United States will follow suit. And why is that good for us stock investors? Because the stock market is a forward-looking mechanism. It is projecting in today what it thinks the price will be a year from now. All of a sudden, if it sees, oh wait, interest rates are not going up as much as we thought, that means money will flow back into the stock market. Okay, now think of why money is flowing out of the stock market and flowing out of the real estate market. If I can get on a bank deposit, let's say 4%, let's just say I can because rates are going up, do I want to take on, or another sort of guaranteed investment, you call it a CD or a GIC, whether you're in America or Canada, if you can get a GIC, let's say paying you 4.5%, do you want to invest in the stock market? Do you want to invest in the real estate market? Maybe, maybe not, because you're looking, I've got a pretty good return here. Still below inflation, and most often quite tax unfriendly. But it's not the way people look at it. They look at it, well, I'm getting 4.5 here. Do I want to risk a higher rate of return in this uncertain environment, the stock market and real estate market? Probably not. And what that does, that pulls money out of those markets and into the bond market, right? A lot of people buying bonds because they are afraid of the future. So we can see here that interest rates are probably going to go up next year. Now, I'm looking to buy a couple of real estate properties. I'm going to wait for these for these interest rate hikes to have their full effect, which I think will be sometime, by the early part of the new year. And we know historically the best time to buy real estate is in September or in the dead of winter, let's call it January, February type area. That's kind of the best times. I would like to be buying some properties around that January, February period, but I know interest rates are going to go up still. So am I going to put an offer on it now? Probably not. I'll put an offer on once these interest rates bite. And that's why this information can give you such good knowledge. You know that interest rates are most likely going to go up, okay? That is going to give you an opportunity to be able to purchase some real estate pretty cheap. If interest rates don't go up as much as anticipated, that would be very good for the stock market. And that's why it's so important to be financially literate so that you know how to look at these things, okay? So anyways, guys, there is the dot plot, okay? And there is the outlook on interest rates. Now, interest rates have to start coming down. Basically, if they don't come down, we're going to have a serious problem. And that problem is inflation. Inflation looks like it is coming down to some extent, but it's still quite stubbornly high. Real estate prices are getting absolutely annihilated, and that was the intent of the Federal Reserve and the Bank of Canada to begin with. Okay? Their job was to try to really slow the economy down without killing it. And that's why you've heard that word hard landing versus soft landing. What they're trying to orchestrate is a soft landing. Hurt the economy, hurt the consumer, don't destroy them. Hard landing is if they increase interest rates too much and they pull all this out of the market and all of a sudden people are scrambling and they can't afford it and you're having bankruptcies and blah, blah, blah. It's a complete shit show. That's what they're trying to avoid. That is a hard landing, okay? Now, one of the main things that, in my opinion, is really going to affect the consumers is the rate of which these increases have come in. You know, you started the year off at, let's say, 0.25% Federal Reserve. Now, by the end of the year, you're 4% higher than that. 4%. We know how much debt consumers have taken on in the last number of years and what's fueled a huge bull run in real estate. Now you're paying 4% more. Think of all the people who are refinancing variable rate mortgages. What's going to happen if they can't afford their mortgages? Well, they're going to have to sell. Their property's not worth as much. And this could present a tremendous opportunity on the real estate side if you have capital and liquidity. So I want to get it, just guys, if you want to be a member of the community, take a look at what we do here at ThetaTradingCo.com. We are all about getting ourselves into a position of wealth. And I did it myself. I got myself out of being broke and having nothing but student debt into a position where I don't have to work ever again if I don't want to. And that's a great position to be in. And it's not something I'm bragging about at all. It just tells you simply it can be done by any idiot like me through education and application of that education. That's it. So we are creating a community here at Theta. Check us out, ThetaTradingCo.com. If you want to learn how we make money in the stock market using options and real estate, book a call with us. We have a link there. Until next time, guys, take care and talk soon.